Right. God, we're very light this evening. Let's just romp through this. This is a very nice summer evening. Right. Nasdaq. So we've had a couple of shallow weeks followed by this big push higher at the moment. So that's not untypical. If you're looking, this is a weekly chart of the Nasdaq. And you can see that if I just expand this out, yeah, this is it. So a couple of weeks of marginal lower closes, dips into support, runs, pulls back, drifts sideways, runs, drifts back, moves sideways, pushes higher. You get the picture. So all we've done is had a typical sideways action, consolidated and then broken up again. Okay, so we are at high. Now we come up on volume. This is the stochastic. Let's get rid of that and let's just put the MACD back on there. Tell you what, let's put an RSI on there as well. As you can see on this weekly chart, we are high. Now, let's just talk about RSI for a minute. RSI is basically saying this market is strong. It's not saying it's overbought. So let's not run away with the idea that yeah, this market is too high. It is just very strong. So if we now put some fibs on it, so this is the fibs from the COVID drop. So you can see on, oh sorry, this is the Dow, isn't it? So I thought I was talking about the Nasdaq. It doesn't matter. It doesn't matter. So you can see on this chart we are potentially heading for 36,700, and we are currently 34,800. Okay. So at the moment there is pullbacks are still viable. So the pullback on this one would be around about 34,200, 34,300. Let's look at the Nasdaq, on which I thought, yeah, so Nasdaq is, that's 3 weeks of lower closes. But all we've done is dipped into this April support and we've held. So there's a lower wick on that. Let's look at the daily. Yeah, so we've come up to this 14,000, struggled. So we're running back up at it. So we're taking a pullback, sitting up with the potential still to go higher. So the pullback zone is here. So we could come back to 500 or 600, which is just a couple hundred pips under here, and then potentially go back to that high. Obviously, if we close under 650 at any point during the week, particularly the first half of the week, then that could see us come lower. If I pinch back from that, you can see that we are sitting up. The fact we're sitting up above 600 is very bullish on this daily chart. So we had kicked off the week with quite a significant drop into 350 and then closed at 720. So Yeah, this 500 or 600 is the pullback for the buy on that one. Right, DAX. DAX had that's a great week. Look at that, right back in. I've had this pink zone on for ever since we came up here. It's looking at the 20th of April range, because ever since we came up here on the 1st of April, we went sideways for ages, broke up, and then did this deep pullback higher. I'm suggesting these markets are bullish, unless we start closing underneath significant support levels, particularly in the first half of the week. So 15,250, so the Friday low here, or potentially all the way back to that 130, is a good pullback. I would suggest that 250, 300 is the pullback area in this DAX. And then if we are going to break, then we need to close above obviously the Friday high, which is the top of this pink zone. And the FTSE, UK stocks are doing really, really well, very resilient. So this plays into the pattern I've talked about on this one. So any pullback, wow, it's had a good week, hasn't it? So the low of the week was 6,900. So we're 240 pips off of that weekly low. Let me have a quick look at what data we got coming in. I've not double checked the data. Let me just hold on one moment. I don't think there's anything significant next week. So we're Bank of England and US jobs last week. We're UK GDP on Wednesday. We're still looking at negative numbers for UK GDP. Now, at the moment, the market is just brushing off weak numbers at the moment. US inflation on Wednesday. So Wednesday seems to be the big day of the week for data. UK GDP and US inflation. So the pound, Fed budget balance. A lot of Europe is off on Thursday. And US retail sales on Friday. Okay, so in theory, 7,100 is the pullback on the FTSE. Let's look at the volatility index. I'm going to rattle this volatility. Look at that. We're just falling off the scale, broken down through a key area. That is incredible. Okay, so we've got extreme low levels down there in January 2020. Dollar is heading south quickly. So that's really, really significant. We sat up on Friday the 30th of April, and now we've broken under these lows. So we look as if we could come back down to that 89. What does that mean for the bonds? Hurricane Energy, okay. We'll look at that in a second. Well, you need a sustainable bond market, and we held up pretty flat, but on the whole we held up. I think it's going to be a concern if this drops off. If this loses its footing and the yields go up, that's a concern. So we need to stay focused on the dollar and the 10-year notes, 10-year US notes. Right. So if you flick through commodities, gold gone right up into that pink zone. I drew this pink zone some weeks away. So at the moment, any pullbacks to 1800, 1800 is the obvious one. Any dips underneath 1800 are potentially to be bought. That's a very nice move in the gold. The silver has broken up as well, taking its time. Any pullbacks to 20, if you 26.5 is the pullback area. Yeah, you know what? I think that might want to rest a bit and pull back there before that carries on. Oil is struggling up here, and oil is actually very divergent. That sometimes just means, so we got a higher high and a lower high in the histogram, and look at the averages coming off. These are not default averages, by the way. I've got 8.21.8. It's normally 9.26.9. I can't remember what the standard is. I've quickened it up. But so the oil definitely could come all the way back to 60. The dollar's weak, so this has got relative weakness. This is while the dollar was pulling back, this was also being pegged back as well. Now that cyclically, that's normal. It's not unusual for oil to drift sideways at this period. Beans just not pulling back as with wheat. So commodities are romping away. Right, let's look at natural gas is even holding up. And that's unusual for natural gas to hold up so high this time of the year. That's very unusual. Definitely diversion up there on the MACD, or even diversion on the RSI. So this definitely appears to be getting ready to pull back, as I'd expect cyclically. So look at copper. Wow, that's just on a tear. Not holding back. Right, let's have a quick look at the pound. That is obviously got UK GDP on Wednesday. So we weren't able to close above 140. So, but judging by the dollar index, any pullbacks to 139 should see that get up to 140, 142. Pound yen. It's been very range bound. We're really not doing much at the moment on that one. Euro, very significant pullback. So the pink area is up there at 122. We look as if we're going to get there pretty quick. So it shows you how strong the DAX is. So we've got the euro and the DAX coming up at the same time. That's real relative strength for both. Normally they're divergent. A weak euro pumps up the DAX because of the way the big players rely on the dollar. So that's very, very bullish. China, let's look at the Chinese index. So this is the concern. There are some concerns in the market. The fact that China is flat to low, it's not breaking out. You know, China is structurally weak on this chart. I'm talking about the technical aspect of this chart. Okay, so at the moment that looks as like a dip back to 1660, 650 on this Chinese A50 index. That's a concern. If Asia is not holding up, Japan is. I would be concerned if we keep closing lower in China. That's in a apex. Right, let's go to well, seeing as Michael has put in this hurricane energy, let's have a look at hurricane energy. Wow, I share your concern. I think technically that's a bearish consolidation. So you can see how it's structurally broke down on the 30th. It's close to zero, just not holding. When did you get in? What date and what price did you get in? I noticed obviously when we did the same here in December, we picked up, closed this gap, didn't we? So back here in February, we closed this gap. You got in around about 6p. So you're seriously out of pocket then. Well, it's close to zero, so there's not much more I can say about that. Unless that starts to get above 120 in the first half of the week, who knows? It could go to zero. They could wipe it out. I mean, the writing was on the wall. You know, I admit, like, I can see why you might have stayed in it, because here, you know, we had this huge drop, and then we punched right up to 430, and we looked as if we're going to do the same here. Okay, so obviously the two closes on Wednesday and Thursday, or 28th, 29th of April, were definitely a concern. But that's a hell of a plunge on Friday the 30th. Not much more I can add to that. Yeah, it could potentially go to zero. Let's look at, stay on the subject of oil stocks then. Tullow. Now Tullow's, bear in mind about the oil. Oil at the moment has got relative weakness. Because the dollar is very weak and the oil is not sustaining the highs at the moment. And China is flat. So there are definitely some issues in this hot market. Definitely some issues. And let's face it, we're in May. Sell in May and go away. You know, the main cyclical period of profitable stock trading has passed. Let's look at equity clock. Let's look at equity clock for oil. Let me just grab it, crude oil futures here. So over an average, over a 20-year average ending 2020, last year, you tend to see oil pulling up in May and then back in June and doing a last leg into June, July before pulling right back. So this is the drive season. That's where all the contracts for the drive season get sucked in. Yeah, we'll look at Fubo and skills in a minute. Okay, so that's so potentially oil has still got a last leg in it for the next couple of months by 20-year averages. Let's look at the indices. Let's look at let's look at the S&P. Well, that's small cap, isn't it? This is the Russell index. Oh, it's not going to let me look at it. Okay. Let's not go there. Okay, right. Let's look at hang on a second. Let's stay on the oil theme for a bit longer. Let's look at BP. Yeah, so this 320 is a big barrier for BP. We've closed the gap. We closed the gap up there on the 8th of March. And we're going sideways. RSI is high. And we could so easily, if we can close above 320, 323, then we're going back to 360. If you're a short to medium term trader, you should be taking profits up here. If you're a longer term trader, medium to longer term trader, do nothing, just keep your stop out of trouble. Okay, quick look at Shell and then we'll get on, because I don't want to spend too long here. Royal Dutch Shell B. It's already seen 1520 and pulled right back. Right. So that's going. This is going ex divvy Thursday. Right. Okay. Yeah. So any potentially any pullbacks to this floor here, 1290, 13 is viable. Again, we have not closed the gap. Yeah, we just about. No, we've not closed the gap. So the gap fill is 1536, and we've not. Well, we've seen a high of 1520. So we've nearly, very, very nearly closed the gap. So at the moment, this is potentially a pullback place. Right. Let's look at. Rolls-Royce sitting up, looking better. If you're not in it, any pullbacks to 103. Let's look at TUI picking up on the prospect of restrictions coming off. Let's switch to the banks. Barclays. So we pulled right back to 170. This 180 is a key price. You might find that just dropping back a little further. Yeah, it's certainly very hesitant. Yeah, tell you what, if we close under 175 and subsequently close under 170, this could see a deeper pullback. But at the moment, this pullback has got bought, and we could go back to the highs. So it's a little bit hard to judge that one. We closed higher on Wednesday and Friday, so that bodes well. Let's look at Lloyd's, sitting right up there. So they've got a gap down there at 43. Any point, if you're interested in getting into Lloyd's, then 43 gap might do it. Let's look at bellwethers next, holding up, looking higher. Ocado. Ooh, that's a potential buy signal. That's a potential buy in Ocado. New low in the range, immediate close higher. Any Ocado fans? Anybody prepared to trade Ocado? So we're coming to a major support area at 1916. I think that is very interesting. 29.25. I would try and hold out for 1935, 1920, 1935. If you don't get fit, I would leave the order in at that price for a couple of days. And if the market doesn't like the GDP number, you might find that coming lower. But that is a reversal signal there. Give me 1 second. Ocado on a weekly chart, okay. Ooh, that's a very good question. That is not a pretty weekly chart. That is not pretty. From the point of view that we've closed, there's the main support at 20 quid. And we've closed underneath it. I still stand by what I said. Yeah, that's a huge amount of support down there. The thing is about reversals, the whole aspect and strategy behind, for me, for a reversal, is that it's higher risk but much higher reward. At the moment, this is falling. You know, the highs are falling. We've had 2 weeks of lower closes. So if you trade Ocado, you are taking a higher risk than with a good trending stock, because that's had a significant drop from 29.20. Oh, sorry, close to 30 quid. And here we are under 20. So that's a very significant drop. However, if this works, the reward is much higher than with other stocks, because you've got the potential to go back to 20 to 30. That's the whole issue of trading reversal. Yeah, I don't know. You don't know. Warren Buffett doesn't know what this is going to do. So that's the higher risk. So you either decide if you want to take that risk, or leave it and wait and see how the coming 1, 2, 3 days unfold. That's the decision you've got to make. And you're absolutely right. It could definitely still drop. But history of the chart says that when you get here, you normally get a breakout. Now it could be that it dips in, it hangs around here for a while, dips a bit lower, and then reverses. But that is the strategy behind a reversal, trading a reversal setup, and the risk factors that you got to, and the decisions you've got to make, whether you are prepared to take this or not. Because like I said, this is Every time this is punched higher, it's sold off. Punched higher, sold off. But it's only the significant sells have come from these high levels. But we're still in a sell area here. We've still broken down here. So there's only 1 day of higher close there, but that's the way I trade it. That's my strategy. So your call, not mine. It's your call, right? But you're right to question it and keep an eye on it. I'll tell you what, I would rather buy a stock at a higher price with a higher probability than buy a lower stock and get stopped out. So your view about sitting there and watching it is bang on. So why am I suggesting you buying it? Because sometimes when you get a big reversal like that, it could start to fly. You could find yourself up there at 22, and you'd have to buy a pullback on a much higher level, right? What am I going to look at? BT is flying, and now that's a potential reverse signal, a new high and immediate close lower on extremely high indicator readings. So BT could short term be over and done with. Short term. Again, if you're a long-term investor, do nothing. If you're a short to medium-term investor, you should be at least thinking about taking profits, taking it off the table, selling money and go away. Is that going to work? I don't know. You don't know. All I'm doing is reading the charts. That's all I'm doing. Simple as that. Easy. Yeah. Look, these COVID-related stocks are picking up. I've heard that they are potentially. I heard that even Germany is improving. Their rates are dropping. I think they're considering lifting some restrictions. Sainsbury's higher. We looked at ABF last week, didn't we? Flat at the moment. Let's look at right. Let's look at some US stocks. BT. Plug, yeah, I've been monitoring Plug. Let's look at. Bear with me 1 second. AstraZeneca sideways to holding up. Sage. That pullback looks as if that's gap filled. Gap filled at 630, and we're now 636. Informer. So I'm just going through some more UK stuff before I start devoting my time to. I'm. This 55 is a major area on IQE. I think if you want to get into IQE, it's definitely worth trying to pick up 55. It may just want to go lower. It just sort of looks as if that may want to go lower before it goes higher. But we're holding 55, so it's hard to call. Right, let's look at Plug. We'll look at skills. That was not a convincing close. This technically there's no reversal in place. There's no reversal. We had a reversal set up here on the 30th of March and it failed. New low, immediate close higher. Actually, that's not a reversal setup. Sorry, that wasn't a new low. That was just a bearish consolidation. Oh, it turned out to be a bearish consolidation. I think the jury's still out on this one. Where am I going to take it from? Let's have a look. Where's the 2020 lows? Let's take it from. All right, I'll have to go all the way back. No, I can't go back that far. Let's go from this level. At the moment, I would have to say that looks lower. The main support's down there at 19. That may go further down to 19. Yeah, I think let me just catch up with some notes. Hang on. Yeah, it looks lower. Right, let's look at the US growth stocks. So there's some SPACs that are not doing anything. Right, growth stocks, where are we? Oh, miners, sorry. I've forgotten to look at miners. POG holding up. Pan-African doing really well. Fresnillo is turned around, potentially. Griffin doing nothing. Right, I'm definitely looking at US stocks now. Right. Skills. That's still struggling. It might come back to that 12. We've got to close above 17 for this to potentially get back to the highs. That's fragile, but holding just. See, stocks like PLTR is still not doing it. So I let myself get stopped out of that and standing aside. Right, Fubo. This is the concern. If these US stocks are not finding support, this looks lower. We look as if we could see 15 on Fubo. So Fubo and Skills are both struggling hard. PayPal sideways. Square's another payment system. Sideways. These have been phenomenal stocks last year, and the money is just not finding its way back into these stocks. Bristol Myers. Yeah, see that pull back to 62, and that's a pity I didn't see it. I should have had alert set for that. You know what? That may pull back to 62 again. The US market is definitely jittery. ELNK. Yeah. We need to be very careful here. Yeah, with UK GDP looking for quite a poor number, a weak number. In actual fact, the US jobs number on Friday was not great. It was actually quite a weak number. And yet the markets, for some reason, just completely ignored it and just rallied into Friday's close. Well, certainly rallied into the open. But there are some definite weak numbers up there. Right. Okay. Anything else you want me to look at particularly? Let's go back to healthcare a second. What's that? I don't understand that comment about Adler German fashion retailer. Is it called Adler? Is it, you asked me to look at Adler, is that right? Right. We've got Adler Real Estate, Adler. Oh, sorry, I have to leave that. Sorry, I haven't got time. Sorry. The first one, right? Okay. No, I wouldn't touch it with a barge pole. Not unless it closes above 72. Wouldn't touch it. Twitter. Potential revert. Well, it's got a little pin bar buy signal there. That's a decent. It's an important number, isn't it? So we're not closed above that support, and so potentially could go lower. Potentially. I would sit tight and wait and see how the week opens, and see if we close above 54 at least minimum. I think we need to be patient here. Yeah, like I said, I'll repeat again. It's May. It's neutral. It's got the look of something that's not happy sitting there and could go lower. It's a very neutral position. Could come into 622. It's making lower highs. It's a yeah. I think that's lower. Given all the red on that chart, it doesn't look sustainable at the moment. You want me to look at LSE, EMH, EMH. What are they called? European Metal Holding. For some reason, I got that as EMHE. Looks lower. It's definitely going to watch that though. Right, that's me done. Thanks for joining me, guys. I need to run because I've got to sort something out. Good. All right. Well, thanks for your time. But just be careful. There's a few worrying signs out there, but let's remember that these markets finished really well last week, and the volatility index fell off the shelf a bit. So bullish, but just keep a very close eye on what's going on. Thanks, guys. Have fun. Bye for now.